Howdy, everybody. Welcome to the Liberty Call for January 17th, 2025. Hope you're having a fantastical day out there in the interwebs. Markets are rallying on tame inflation data and strong bank earnings, with Goldman Sachs, JP Morgan, and Citigroup all reporting impressive results. Meanwhile, the Bank of England is delaying new capital rules, giving banks more breathing room. In corporate news, Schroders is cutting 200 jobs under its new CEO, and Goldman Sachs is handing out massive retention bonuses for top executives. Plus, a bidding war is heating up for Insignia Financial. Let's break it all down and see what it means for your money. But before we do, I need some thumbs up, a like, share, subscribe, a follow, and press that notification bell. And before I jump in, I already called my old man today, but I want to wish him a happy birthday. He's 75 years old. Let me hang on a second. Let me drag this stuff around. Where am I? All right, let me share my screen. There's the old man right there. So he was, well, this is me. So that tells you how long ago this picture. We're out on Galveston Bay on his parents' boat. And here's a better picture of us, more recent. This was probably 2012. That's me. There's the old man, and there's my youngest, who hasn't called in months. So, Raymond, if you're watching, you could probably call your father. Anyways, all right, let's get that off the screen. Put that back where it was. All righty. Well, let's get to the markets. Where am I? There we are. Here we are. And I can see me. Here we are. All right. Well, let's jump into the markets for today. Again, happy birthday, Dad. Let's see here. Dow Jones was up 0.78%, 334 points, closed at 43,487. S&P 500 up 1% flat, 59 points, closed at 59.96. NASDAQ up 1.51%, 291 points, closed at 19,630. The VIX fell 3.86% today. It's at 1596. Canada was up 0.89, Brazil up 0.88, and Mexico down 0.03. Let's go to Europe. Germany was up 1.17, UK up 1.35, France up 0.98, Netherlands up 0.72, Spain up 0.64, Italy up 1.25, Switzerland up 0.4, and Portugal up 1.07. Russian exchanges both green also today. MOEX up 1.18, RTSI up 1.14. And the overnight markets, the Nikkei in Japan was down 0.41, Australia down 0.2, New Zealand up 0.73. In China, the Shanghai was up 0.18, Shenzhen Component up 0.6, China A50 down 0.01, DJ Shanghai up 0.41, Hang Seng up 0.31, and the Taiwan weighted up 0.53%. All right, so those are the markets for today. Let's get to the weekly chart and see how things did. All right, let's start out with the Dow Jones. We're going to finish the week up about 3.73%. The S&P 500 up about 3% even. The NASDAQ about 2.6%. The Dow Utilities up about 4.1%. And the Dow Transports up about 3.3%. So excellent week for all the markets. I guess everybody's in a good mood. Not sure why, because we still have all the same problems that we've had for months. But looking at the Dow Jones, we can see here, zooming in. Here's the beginning of the year right here. Here's the beginning of December, where we started this downtrend. And you can see here we broke through this line of resistance that had lined up here over the last 6 weeks. Broke through on Tuesday. So is this a sign that we're going to have another uptrend for the next few months, or is this just exuberance with the new incoming administration? The S&P has been more flat since the December 1st. I mean, it's been down a little bit, but it's been more sideways. And same thing with the NASDAQ. It's been pretty volatile back and forth. I mean, up 4% and then back down 6%, then back up another 5%. So it's been pretty volatile. So no real clear direction on the S&P and the NASDAQ as we stand right now. All right, let's get that off my screen. And let's get into the economic data that came out this week. Starting out with jobs, initial jobless claims came in at 217. Forecast was 210, previous number 203. Continuing claims came in at 1.859 million. Forecast was 1.87. Previous number was 1.877. Producer price index year over year grew at 3.3. Forecast was 3.5. Previous number was 3%. Month on month, it grew by 0.2. Forecast was 0.4. The consumer price index grew at 2.9% right on forecast. Previous number was 2.7%. Remember that 2% target that the Fed keeps talking about? Yeah, it's going the wrong direction. Month over month, CPI grew by 0.4 right on forecast. Last month was 0.3. Retail sales year over year grew at 3.92%. Previous number was 4.12. Month over month grew by 0.4. The forecast was 0.6. Import prices year over year grew at 2.2%. The forecast was 2.1. Previous number was 1.4. And export prices year over year grew at 1.8%. Previous number was 0.9. Business inventories month over month grew at 0.1% right on forecast. The National Association of Home Builders Housing Market Index came in at 47. Forecast was 45. Previous number 46. And housing starts came in at 1.499 million. Forecast was 1.33, so beat forecast. Previous number 1.294. And building permits came in at 1.483 million. Forecast was 1.46. And industrial production year over year grew at 0.55%. Previous number was a contraction of 0.61. And month over month, it grew at 0.9%. Forecast was 0.3. All right. So I believe that was it. Yep. That is all the data to be told for the week. All right. Let's get into the market recap. U.S. stocks jump ahead of Trump's inauguration. U.S. stocks climbed on Friday, positioning for a positive weekly close ahead of the President-elect Donald Trump's inauguration on Monday, signaling a critical transition in U.S. leadership. As Trump's inauguration nears, market sentiment remains cautiously optimistic, tempered by speculation regarding potential day one policy actions. Analysts highlight concerns over Trump's trade tariff plans, particularly targeting major economies like China. I think we got bigger problems. We got $36 trillion in debt, and we overspend by about 30 to 50% of the tax revenue coming in, which is right now about 4 to 5 trillion. So it's not a spending problem. I mean, yes, we need more revenue into the Treasury to help pay things down, but we could probably get rid of probably half the federal workforce, which would be a good start, and cut all the funding to like GMOs and NGOs and all those sorts of things. All right. Despite these concerns, Trump struck a conciliatory tone, revealing a productive phone call with Chinese President Xi Jinping. The two leaders discussed critical issues such as a trade balance, fentanyl, and TikTok, with Trump expressing optimism about collaborative problem solving and fostering global peace and safety. Earnings season remains a central theme as a diverse set of tech, industrial, and consumer stocks prepared to report results next week. Positive banking sector earnings earlier this week have bolstered market confidence. Morgan Stanley and Bank of America surpassed fourth quarter expectations, joining other banking giants like JP Morgan Chase and Goldman Sachs, which also reported robust performance. Notable stock movements: J.B. Hunt Transport Services declined after missing fourth quarter earnings estimates, signaling potential challenges in the transport sector. Schlumberger advanced after better than expected profits, driven by strong demand and drilling equipment in North America and abroad. Rivian Automotive gained momentum on reports that Volkswagen may explore deepening its partnership with the U.S.-based electric vehicle maker, further fueling optimism in the EV sector. Fueling. Yeah, they don't use fuel. I guess battery. All right. And finishing up, investors remain watchful for next week's developments as the combination of new policies and corporate earnings reports could shape the market trajectory. Good stuff. All right. Let's get into some data. The December housing starts report from First Trust. Housing starts ended 2024 on a strong note, surging 15.8% in December to a 1.499 million annualized rate, surpassing expectations. The rebound was broad-based, with both single-family and multifamily starts increasing, and 3 of 4 regions contributing to the rise. Multifamily starts, often volatile, jumped 61.5% for the month, but remained down 8.4% year over year. Overall, housing starts declined 4.4% in 2024, with single-family starts falling 2.6%. The lag in starts appears tied to builders prioritizing project completions. Housing completions dropped 4.8% in December, but reached a total of 1.626 million annualized rate for the year, the fastest since 2006. Despite strong completions, total homes under construction fell 14.8% in 2024, typically a sign of a housing downturn. However, this trend is likely reflects ongoing underbuilding rather than a market collapse. Housing starts for the year averaged 1.365 million, below the 1.5 million rate needed to meet population growth and replacing aging and destroyed homes. Well, again, if we get rid of the 100 million illegal aliens in the country, I think that solves the problem. Since 2007, the U.S. Has consistently built too few homes, except during the COVID disruptions. The persistent shortage supports expectations of higher housing prices in 2025, even amid broader economic headwinds. The National Association of Home Builders Housing Index reflecting builder sentiment ticked up to 47 in January from 46 last month, still signaling cautious optimism. Modest improvement in the housing market is anticipated this year. All right. So, is what it is. All right. Another report from First Trust, December industrial production and capacity utilization. The exciting stuff, I know. Industrial production ended 2024 on a high note also, with activity surging 0.9% in December and 1.2% when factoring in upward revisions for prior months. The gain exceeded all forecasts, reflecting broad-based strength beyond the anticipated resolution of the Boeing strike, which contributed just 0.2% to the increase. The Federal Reserve attributes part of the December boost to improved business sentiment following the presidential election, as companies anticipate more favorable regulatory and tax environment under the incoming Trump administration. Manufacturing output rose 0.6%, driven by robust 0.7% gain in non-auto manufacturing, which excludes the volatile auto sector that fell 0.6%. High-tech manufacturing stood out, growing 1.1% in December and 8% year over year, supported by investments in AI and reshoring of semiconductor production. The mining sector also posted a strong 1.8% gain, fueled by increased oil and gas production and mineral and metal extraction. Despite a drop in new well drilling, this sector is expected to benefit further in 2025 as the new administration accelerates permitting. Additionally, utilities production, often weather dependent, jumped 2.1% in December. Overall, the December data showcases resilience in U.S. industrial activity, with broad-based gains across sectors and a promising outlook for continued strength this year. All right, so two decent reports. Again, the housing wasn't great, but it wasn't bad. All right, one last article here from Zero Hedge. The LA fires, the social contract is nonsense and no one is coming to save you. This was written by Mr. Ryan McMacken of the Mises Institute. All right. California's ongoing issues with infrastructure and public services have reignited scrutiny over taxation and governance. A recent critique highlights systemic failures, particularly in fire suppression efforts, despite the state's heavy tax burden, the highest in the nation. While taxes are theoretically meant to fund a civilized society, have you ever been to California? Our critics argue that California's bloated bureaucracy and mismanagement undermine the premise. Well, if I could stop here, it is my opinion, and this is just mine, that governments are essentially the mafia masquerading as a public service industry or organization. They break your leg and then they sell you a wheelchair or crutches and then want to thank you. So, without them, life would be great. It's basically a way to funnel your money, extract it from private citizens who actually work in the economy to people on welfare who collect government paychecks. I'm sure I pissed a few people off by saying that, but that's just the way I feel. All right. Wildfires in Los Angeles and surrounding areas, which remain largely uncontrolled, exemplify these failures. Firefighters faced dry hydrants due to neglected infrastructure, despite repeated warnings about growing fire risks. Meanwhile, officials diverted fire suppression resources to Ukraine, smart, leaving local services underfunded. Such decisions have sparked questions about spending priorities. Well, you have to virtue signal for your fellow lefties who get real excited about that stuff. The critique also targets exorbitant government salaries. A fire captain in Los Angeles earned $823,000 in 2023, and other officials command similarly inflated paychecks, often enabled by exploiting overtime systems. Plus, if you don't have a mental illness and not part of the Rainbow Mafia, you're not moving up in a government job. These high costs have not translated into improved services. Budget cuts to essential services like fire suppression and public works were necessary to address financial crises caused by mismanagement and legal settlements. High-ranking officials like Los Angeles' mayor accused of prioritizing personal perks over public welfare. Despite presiding over a city with deteriorating infrastructure and mounting liabilities, a mayor took a taxpayer-funded trip to Ghana, underscoring a perceived disconnect between government priorities and public needs. Granted, she was there for an inauguration of somebody, but it's wildfire season. Well, I don't know. It's always wildfire season. Like where I live, it's always wildfire season out here. You always got to be careful. And finishing up, the analysis concludes that taxes increasingly serve to sustain the ruling class of government employees and contractors while essential services languish rather than fostering civilization. Critics argue that excessive taxation and misallocation of funds erodes public trust and degrades societal well-being. It's no different than when the federal government brings in these illegals or migrants, as they call, and they put them up in houses, and the money goes from the federal government to an NGO. The NGO then sets up these businesses or nonprofits to take care of these people, all the while skimming a little money off the top for themselves. So it's just basically a way to again extract money from people like me, goes through the government where they take their cut, then it goes to the NGO where they keep their cut, and then it goes on to the to the beneficiary. And again, I don't have a problem with immigrants. Come here the legal way, get a sponsor. You screw up, you're fired, you're out. But anyways, all right. Well, that's everything that I had to cover for today, and I'm sure I pissed off everybody with my anarchist attitudes towards government. But it is what it is. I mean, this is not working. This is not working, folks. And anyone who thinks it is delusional. So why do you want to share a government with people you hate? And the people on the extreme left, go to California, go to New England. The normal people, we'll take the middle of the country. It's just, anyways. All right. Well, for anyone who needs to get in touch with me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. I can help you get on track, and also help you try to avoid some of the pitfalls that are probably in front of us with the idiots running things. So hope everyone has a great weekend, and I'll talk to everyone again next time. Adios.